What's good, traders? Welcome to another episode on the trades we missed last week. So on our last episode, we talked about a bullish trade we were anticipating. So if we check the last trade on that last episode, you notice that I indicated that price would come to this spot and rally to the upside, giving you a bullish trade. Now this is what we anticipated, and price actually came to this area and gave us a bullish setup. So let me take this out, and you can see at Sunday midnight to Monday, you could see that it gave us an opportunity to actually enter the trade. So let's see how we would have entered that trade. So we'll put our position here and our stop loss here. So our entry is at the start of this fair value gap here. You can also put your entry here for a second entry here. So let's use this right here and see how the price would have given us profits. So our entry there and our take profit should be at the previous high. So this is our take profit here. You can either put it here, first take profit, this second take profit, or we would put it here. And you can see how the price rallied to the upside, taking out this previous high right here. Let's do it like this, and let's see how many let's see the risk to reward ratio. So this is 9.87 risk to reward ratio if you are taking this trade that was predicted on the last episode. And you can see a re-entry here. You can see a re-entry here. This is on a higher time frame. On a higher time frame, there's a fair value gap at this spot, and this is also a demand area. You can see how the price respected this area and gave us a re-entry here. So see a fair value gap being created here, and also a break of market structure at this spot here. So this would have been another entry if you had missed the first entry. So this would have been your entry here, your stop loss here, and your take profit should be at this goal right here. So this would have been a re-entry for this one here. But if it's too much and if you don't want to be greedy, you can just use this previous high right here. So giving you a sweet risk to reward of 5.3 ratio. So let's move on to the second trade. Now this second trade right here, you can see how price respected a fair value gap right here. There's a fair value gap on a high time frame here, and it also indicates a demand area here, and also a fair value gap when you look at it from a higher time frame. So using this fair value gap and this break of market structure here, you should know that there needs to be an entry for a demand trade here. So this is your entry for the demand trade. So after price tapped into this area, you would want to go to your lower time frame, like the 3-minute time frame here. So as you can see, we are on our 3-minute time frame here, and we need to look for our fair value gap as always. So now we need to identify where our fair value gap and break of market structure is. Now we have a fair value gap here, but there is no break of market structure. We do not have a fair value gap here. We have a fair value gap here, but there is no break of market structure. Now we move forward. After price taking out a previous low, which is our liquidity, and price rally to the upside, and you can see a fair value gap here and also a break of market structure. Now this is your break, and remember, we are looking for an opportunity to go bullish. Now price, prior to giving us a break of market structure, price created a fair value gap here on our 3-minute time frame. So this would have been your entry here. This is your entry, and if you also want to put your entry, your stop loss at these spots, it's better to put it here to be on the safe side. But for more risk to reward ratio, you can put it here, and you take your stop loss, put it at this spot here. For a higher risk to reward ratio, you would want to take profits here at the end of this high, this previous high. This would have given you a ratio of 2.87, or you'd have taken your TP to this spot right here at the start of this fair value gap right here, and this would have given you a risk to reward of 5.4 risk to reward ratio. So that was our second trade. Now let's move on to our third trade. So on our third trade, you can see a fair value gap here, and prior to this fair value gap, you notice that this high was respecting a previous fair value gap. So that will give you a confirmation that price might want to go bearish. So you see a fair value gap here at first, and prior to price tapping this fair value gap, there's liquidity here that price has taken. So the money has passed across. What you need to look for is a newly formed fair value gap, and you can see a breaker here. So let's start from this and fair value gap right there. So this would have been your entry because you have seen a break of market structure at this spot right here. So this is a confirmation that price is going bearish. A fair value gap, a break of market structure, and another fair value gap that price would tap into and rally to the downside. So let's see our entry. So this is our entry, a short position at this spot here at the start of that fair value gap, and your stop loss should be right above the high that created that fair value gap, giving it space to breathe. So you can take your profit here at this low right here for a risk to reward of 2.32 risk to reward ratio. You can as well take your profits here before the start of a fair value gap right here. So this would have been a good risk to reward of 3.12 ratio because of this breaker right here. So let's move on to our fourth trade. Our fourth trade, so this fourth trade goes like this. We have for us a fair value gap right here, and you can see that this fair value gap comes from a previously formed fair value gap right here. So this is a fair value gap here. Let's take it from here to this spot right here. This is a fair value gap right here, and price respected this fair value gap and also created a break of market structure right here. As you can see, there are no break of market structure here, even if price created a fair value gap right here. You see how price created a fair value gap right here, but there are no break of market structure. So we still need to go up and wait for price to create for us a break of market structure a break of market structure here. See how price created a break of market structure, and the next thing we need to look for, price prior to breaking that structure, we identify a fair value gap, and this fair value gap is right here, signifying a push to go bearish. So anytime price might want to tap into this zone, it's an indication that price would go bearish. So you see this fair value gap right here, and also an inducement right here. So this has given us a bearish entry, and you would have taken your trade like so, like this. So for your entry here, and your stop loss at this high that created this fair value gap right here. So the next thing is our take profit. Take profit should be here, the previous low, or this one right here. So let's look at this one right here, and you see that this is giving us a 4.35 risk to reward ratio, and you can see how price goes to our take profit right here for our number 4 trade. So let's go to our number 5 trade. So this is our number 5 trade, but before we can check this trade out, we need to go on to our 5-minute time frame. So we are on our 5-minute time frame now, and you see how price respected the fair value gap right here. So this is a fair value gap right here on a higher time frame, like the 15-minute time frame. It's more clear to see a fair value gap right here on a 15-minute time frame, and what we need to look for is a break of market structure and a fair value gap. You can see one trade right here, see a fair value gap right here after price tapped into this fair value gap, and you can see an entry to the upside. This would have given you a risk to reward of 6, okay, not up to 6. This would have given you a risk to reward of 4.16 for this trade. And if you miss this trade, as you can see, this trade actually gave us a break of market structure. That was why it was valid for an entry. If you miss this trade, you can see price tapping into this fair value gap again, creating for us a demand zone here. So this one also created for us a fair value gap right here. You can see the fair value gap right here. Then you drag it to the low that created that fair value gap, and the next thing is your break of market structure. Is it obvious? Yeah, so we have a break of market structure right here, and you have your entry. So this is the number 5 trade right here. If you miss the first one, so this would have been your entry for a bullish move, and your stop loss is right here. Your take profit should be at the high, the previous high, or this one here. And you can see how price rallied to the upside, even reaching this one right here, this high here. This would have been a much more profitable but a greedy trade. So it's better you leave your take profits at a reasonable price. So this is a risk reward of 2.34. Let's go on to our number 6 trade. Now our number 6 trade is a continuation of the number 5 trade. Now we have a tap into a fair value gap right here, and you see our price rally to the upside. What we need to look for again is your break of market structure. Now we have a break of market structure here. This will be easier seen on a higher time frame. We have a break of market structure right here and a fair value gap. So this is your fair value gap here. Your fair value gap should be at the start of the end of the previous candle to this low that created the fair value gap. So this is our number 6 trade, and we take it like this: a long position from here. You see our price tapped into that fair value gap, did not waste any time, and rally to the upside. So this is your stop loss right here, your entry just here, and your take profit should be at the high, the previous high, or any high at all at this spot here. So with that being said, this previous high would have given us a risk reward of 5.43 ratio. So that would have been a very good trade. So our number 7 trade is at this corner here, just a quick sell after this bullish trade. Now this is our fair value gap, like we always look for. Our fair value gap, price tapped into this fair value gap right here. The next thing is to look for a break of market structure, and this we have a break of market structure after price tap into that fair value gap. The next thing we need to look for is, prior to that break of market structure, do you have any fair value gap? And yes, we do have a fair value gap here, and you can see how price tapped into this fair value gap and took out this inducement right here. So this is your entry here for a quick sell. For short position, we take our entry here and put our stop loss here above the high that created that, fair value gap, and your take profit should be here. Your take profit should be at the beginning of a fair value gap or at the end of a low right here, and this would have given you a risk reward of 3.92. and let's check it out here. You can see how price rallied again to the upside. This would have been a risky trade, but price rallied again to the upside and came back to hit your TP right here. And with that, we have our next trade. So this, our number 8 trade, is price tapping into this fair value gap and a breaker here. This is a fair value gap and a breaker price tapped into. On a much higher time frame, we would have seen that more clearly. And you see our price tapped into this area, taking out this previous low right here. The next thing we need to look for is a break of market structure and our fair value gap. Now we have a break of market structure right here. This is it, and we have our fair value gap here, and this is all on our 5-minute time frame. Now we have a break of market structure and a fair value gap right here. Now we expect that price would tap into this fair value gap for a bullish trade. Now put our entry here at the start of that fair value gap and our stop loss here at that low. Then our take profit should be at the previous high here, or a start of a fair value gap right here. See, fair value gap right here. So this would have been a risk to reward of 3.86 risk to reward ratio. So let's move over to our number 9 trade. So let's shift this aside, and our number 9 trade is tapping into a newly formed fair value gap right here. Let's like this. You see how price tapped into this fair value gap right here. Here, let me use my demonstration tool. Price tap into this fair value gap right here, and we anticipate that it should give us a nicely formed break of market structure here. And after price gave us a break of market structure, what we just need to look for is our fair value gap prior to that break of market structure. Some would have entered here, but price did not tap into the fair value gap yet, and this would have been your inducement right here. And you anticipate that price would tap into this fair value gap and into this order block and rally to the downside just like this. So our trade would be just a short position like this. Our stop loss should be above this previous high that created that fair value gap, and our entry at this fair value gap, and our take profits should be this previous low right here. Should be our take profit, giving you a risk reward of 2.38 here, or going down to a previous low right here. See our price rally to this previous low right here. Let me highlight it for you to see. So price is very intentional and taps into this one here and rally down and rally back up, having tapped your TP, and this would have given you a risk reward of 4.92. And next we have our number 10 trade. This number 10 trade, I was anticipating price would tap into this area and give me a bullish trade, because prior to this trade price tapped into this fair value gap right here. So that is why this box is here, and price also took out this liquidity here and also gave me a fair value gap. And prior to the trade here, the trade entry, you can see how price price had given that break of market structure right here. We have a break of market structure after price tapping into a fair value gap, then we also have a fair value gap right here. So this is giving me a bullish trade here. So we have a fair value gap right here, and anticipating that price would tap into this order block and give me a higher risk to reward ratio than just using the fair value gap as a whole like this. This wouldn't have given me a risk to reward ratio that was large enough. And let's look at how I was anticipating the markets to go. So this is your entry here, and your stop loss should be here below this low right here, and the take profit should either be at this high right here, so this should be my take profit, or at the start of this fair value gap right here. But this would have given me a very slim risk this would have given me a very slim risk to reward ratio of 1.37. So I'll just take my chances and expect price to rally to this upside here or here, giving me a risk reward of 3.43. No, I entered at this order block here, so price would have given me a rough 4.47. so still expecting price to rally to the upside right here. And if you have any other opportunity here, so trying to call this, if you have any other opportunity as the week begins, you can also enter here and price could change. All right, thank you for sticking to backtest with me, and you can comment, like, tell me what trade you took, what number of trade. Is it the number 2, number 3, or number 8 trade you took? And we'll meet on the next episode of the trades you missed last week. See you and peace.